overnight we had a much larger build than expected. I think it was around 600,000 barrels. It was expected to be flat. And we came in and we had a very kind of neutral morning, neutral session coming into the cash open. And which you can kind of see we spent the entire days trading within the previous day's cash range. So I thought that initially was kind of significant. Very tight range within a relatively small range in itself. And then obviously we had the cash open come 2 o'clock. We had this very strong open drive, strong profile initially, kind of sat above the kind of balance of the European overnight session. So kind of had a few different contrary signals to start the session going into the inventories, but I kind of think it looks a lot cleaner on the 5-minute chart. So when I kind of look at my 5-minute, basically my premise was, so we had that really tight European overnight session within the cash range of Wednesday, but specifically so we had it in this kind of whole sell-off. So if you take the 21's high all the way down to the 86 low, which was the cash low, the cash high was 33s from Wednesday, and basically we spent this whole entire session within this range with no kind of sort of initiative to break on either side going into the inventory. So if you were kind of playing within this range or waiting for something to happen, the chances are, if there was going to be range expansion, range contraction, it was probably going to happen over the inventories. So this was the API candle we had, as you kind of see, very big build, and basically spent the rest of the day balancing. So my premise going into this, the premise going into the inventories, going into the thing was kind of to see how the market was going to react around these big streams, and predominantly the 88s, given that we were kind of trading. This is where we were trading going into the inventories, and although this kind of looks very choppy and very kind of hard to digest, it was actually quite some good flows and kind of clean trade ideas. If you were patient, you could have done a bit of damage beforehand, or you could have tried to have the right idea, or you could have taken this trade in a number of different ways. So when we were kind of balancing into the top of this block, my kind of initial impression was that we should at least extend, basically the potential to extend quite, violently if we were to, especially if we were to have a draw or we weren't to have a bigger build, was quite high, I felt, at this point. But the market actually came out, we had a 700,000 build instead of 600. So as you'll see, I actually sold the number initially. And basically for me, the area of focus was these 56, 58s. If the market was to kind of get below there and really punch, especially given that we'd kind of failed at the upper extreme of the balance, we could have rotated quite quickly down to the low. But as you see, we fell below here, and then we kind of got picked up and had this really explosive bid. So I'm basically just kind of going to show you how I traded over here and how I kind of varied my clip size according to what I felt was kind of higher conviction at the time. So if I just pull up my ladders, so basically for me, like I said, the 88s was a really key area for me at the market. If the market was to kind of break above here, I mean, given that we have about 10 seconds till the number comes out, the market could have well have blipped off my page at this point if it was a big number and that was the trade kind of gone. But you had the 21. Basically for me, if the market was to break above these 88s, the kind of the 21s was kind of the first area in which you may want to look to start getting out potentially if it was to go there relatively quickly, and then reassess kind of what flows we had at that point. So as you kind of see, we're waiting for the market number to come out, and like I said, I was kind of focused on those 58s, 56s initially, but so obviously because of the build, I kind of sold. I sold very small size, and basically what I want to compare between the two breaks. So this appeared to be what may have been, if you were trying to play momentum and follow through with the number, etc., and the kind of technicals, is the actual kind of volume and size going through. I mean, obviously it was easier. It's easy to see in hindsight now, but in terms of the actual clip size going through, notice the actual size of the clip. So kind of when I was comparing the two, it's very, very small, and it's also very consistent, and there's nothing really anything over 50 lots at a time. I mean, yeah, it's still quite high paced. Yes, there is volume. It's like high speed transactions, but there was never any kind of everything was very around an average of kind of 20, 30 lots at a time, sometimes 10s, 1s, 2s. There was never consistent big clips or one price absorbing like an anomaly amount of volume, especially after we kind of faked below the 58s. This was kind of for me, like the reason why I sold it earlier was because I was kind of preempting this to kind of punch and follow through, and when the market was kind of chopping and not having that kind of like high volume churn below a certain price or at a certain price and showing you some kind of anomaly behavior, that was when you can kind of have your reaction. But that's when you can start to kind of maybe size up and attack more momentum. But as you can kind of see, we're kind of chopping and balancing. It's not necessarily giving you anything kind of directional at the moment, and obviously I'm kind of bearing in mind that above 88s, I'm pretty convicted that this is going to have a kind of a much stronger move. So we kind of have another flush down again. I just got fast forward this one bit, and again notice the kind of the size of the clips again, and kind of after a second test below 58s. The second test below 58s being kind of fail to kind of follow through again. So now I'm kind of thinking in the back of my mind, right? I was kind of wary as to. Okay, at this point now I was very convicted with the 88s being kind of a strong, powerful break if we were to kind of push above this now. So, as we kind of see here, as we approach the 88s, 89s, often with times like this I find when you're kind of trying to be really precise, especially in oil, you're better off actually kind of hovering over maybe 2 or 3 ticks above instead of a tick above, if you're trying to be really precise. Just because the market can, and as you'll see here how we trade into it, we kind of trade really high volume, really high speed, but we kind of we flip back. I end up actually getting a better price because of it, but you need to kind of just trust in the idea and the kind of shift in the book and everything that's kind of happened and how aggressively we trade into it. So instantly, another thing I didn't actually mention beforehand as well was kind of the size on the bid or offer in the direction which we're trading. Like for example, when we were kind of flickering down around the 58s or so, the offer was never really that stacked, and when it did kind of get close to trading the prices, the bids and the offers would get pulled, and we kind of started doing that regular kind of odd volume trading. And this scenario, as I think you'll kind of see, the bid kind of puffs up a lot more. We get a lot more volume traders. So for example, you'll start to see 100 lots being clipped, being traded into the bid and offer, and I believe it's around 95s. We have this kind of like real anomaly volume event where we start to take around these 94s, 95s. We start to take a load of volume around this kind of small area here. But the actual number of clips that we've seen within the space of 3 or 4 seconds, we're kind of having, hundreds of clips being, 3 or 4 times in this kind of small space. So, like I said, the kind of target and the kind of the size of the bid as well, as you can kind of see, it's just a lot more kind of puffed up in that kind of sense, with the direction of the move after you've had all this information of failing lower, re-breaking above the balance high, and then kind of looking at the trade those 21. So that was kind of the main trade, and even now you kind of still seeing this volume is still just really, really high. The clip size is just at market is something which is a lot different to what I kind of you were seeing before in the offer, and it was always kind of, there was never that one price or 2 or 3 kind of small that pocket which was taking us like an anomaly amount of volume, which is really important in a market like oil when it's trading really fast, and you can't actually keep up with each individual kind of price increment. But that was kind of the main premise for me today, was that of this oil was you can kind of play the intraday volatility quite a lot, especially over a number like inventories, and especially when it's kind of so compressed over a long period of time. I think if you're really patient and you focus on real basic things, especially even though the market's kind of the volatility's contracted a little bit, I'd say perhaps on like a longer time frame, but in terms of like smaller time frame intraday volatility, I mean there's so much of it, and you just kind of have to be be precise and take lots of precise in execution, but also be able to take lots of small losers, and not hang around in trades for too long when they don't kind of work out. Like for example, on the break of the 56s, like arguably I maybe hang around a bit too long in the first time when it failed once, then it kind of went again, and then I was lucky, and that it gave me that second chance to fail and really have that conviction when the offer was completely, it just kind of got pulled and it was really thin. To have conviction in the bid, so I mean that was kind of potentially lucky, down to variance or whatever. But these things kind of if you take enough small losers over and over, and then you kind of you can take your 30-40 tick winner. Especially over a number like inventories when it's really volatile, there's going to be volume, there's going to be potential flows in a direction. It's when the market kind of gets locked up in these tight balances where you need to kind of just be sure as to know where you want to where you want to play and kind of just know your targets as well. Like, for example, these 21s, it was really important. My execution and scaling probably wasn't as good as it could have been. I could have let everything go to 21s and then start to scale out. But this was all kind of when oil was moving so fast and stuff like that. You need to really kind of just focus on where you're getting out as much as where you're trying to get in. But